done since we got here?
Oh, that burning question. Is it cheaper to rent a home or buy a home in today's market? USA Today just came out with an article claiming that it is actually cheaper to rent a home versus buying one because of the rising interest rates and the rising home prices and what have you. And okay, maybe they have a point there, but you know what? I had to take it upon myself to see if this was true. In this video, I'm going to break down for you the cost of buying a home versus renting a home. And I'm going to share with you the pros and cons of each one. And we're going to see, is USA Today right? Is renting a home cheaper right now? We will find out. Let's get started. So, you all know how much I love doing my polls and my quizzes on my community. And thank you so much to my awesome community for always participating. I so appreciate it. And by the way, if you're not a part of my community yet, like, why aren't you? So I just did a poll the other day talking about this very thing. Like, given the state of the current housing market, would you rather continue renting or are you still looking to buy a house? I got to tell you, the number surprised me a little bit. So as of today, October 18th, this poll has been up about 22 plus hours at the time I'm recording this. And the numbers are pretty astonishing. So 46% of you said that you are buying a home no matter what the price is. 46% of you. However, those of you who want to rent was 54% of you. 54% of you still would rather rent in this current market. So I found that really, really interesting that you guys are just thinking it is going to be cheaper. So let's get into the numbers right now and break this down and see what it's actually going to be costing you if you were going to be renting versus buying. First, let's talk about buying a home. The most expensive thing is your initial cost, right? You have to put a down payment, you have to pay your closing costs. So that is pretty much the most expensive thing about buying a home. But once you've gotten past all of that, what does that monthly payment look like? So here's what I did. I went on Zillow and I found a home in New Jersey for $500,000. The average sales price in the United States today is about $495,000. So I rounded up and went to $500,000. So this is what I found here in New Jersey. This is a 4-bedroom, 2-bath home, approximately 1,152 square feet, again, for $500,000. Now let's break this down. So let me break out my trusty mortgage calculator. So let's take a look here. I'm going to give you two examples. We're going to do one with 20% down and another with 10% down. So with 20% down, that's a $100,000 down payment for a $500,000 house. So therefore, you're borrowing $400,000. Now, I put in today's interest rate of 8%. Some places, some banks I'm seeing is slightly over 8%, but I stuck with the 8% number. The property taxes on this house are $11,230. Homeowners insurance, I gave a number of $1,500 a year. So breaking that down to the monthly payment with your principal, interest, property taxes, and homeowners insurance, you're looking at a monthly payment of $3,995 a month. And that's with 20% down. So now let's use the example of putting 10% down, which probably that's what most people can afford, especially when they're buying a $500,000 house. 10% is probably more realistic for most people. Now at 10% down, that's $50,000. So you're borrowing $450,000 at 8%. Because you're putting 10% down, you have to pay PMI, the private mortgage insurance. Now, in this example, your mortgage insurance is going to be $187.50. With your property taxes, PMI, homeowners insurance, your monthly payment with 10% down is $4,550. It goes up a lot from when you put 20% down versus 10%. So getting back to those initial costs, now let's not forget you have closing costs to pay. Now here in New Jersey, the average closing costs are between 2 to 3% of the purchase price. So in this example with a $500,000 home, you're looking at about between $10 to $15,000 in closing costs that you have to pay at closing. Not only you're saving for that down payment, you got to save another $15,000. So say your $100,000 is now turning into $115,000. Your $50,000 is turning into $65,000 that you need to have in order to go and buy this $500,000 home. Now, the other thing with owning a home is the maintenance. It gets expensive to make repairs and to maintain a home. I've seen it a lot of times. My buyers, once they close, within the first month or two, things go wrong. It just happens. It's Murphy's Law. whether it be the water heater, the central air, the roof starts leaking, things happen. You need to be prepared for those expenses. The rule of thumb is you should have 3 to 6 months of living expenses saved for emergencies in case something comes up and you have to make those repairs. Now, another thing is keep in mind, yeah, that monthly payment, the $3,995 or the $4,550 payment, that will go up too. Remember, your principal and interest stay the same and your PMI stays the same. Your property taxes and homeowners insurance will increase over time. It's not going to increase drastically, but expect that number to go up over time because your property taxes are always going to increase. So let's get into the pros of owning a home. And the biggest benefit, obviously, are the tax deductions. Okay. People are saying owning a home has great tax benefits. And yes, it does. It has great tax benefits. So let me get into what the actual deductions are that you can deduct off of your taxes. Now, keep in mind, I'm a real estate agent. I'm not an accountant. I'm not a CPA.
Numbers, the most boring of all the shapes.
If you want more information about this, please contact your local accountant or CPA and really get the hard facts on this. Now, when it comes to tax time, the deductions you're allowed to take for your home, your mortgage interest, the PMI, private mortgage insurance, any discount points. If you paid any points to lower your interest rate when you got the mortgage, you can write that off as well. And lastly, your property taxes you can deduct, but only up to $10,000. Now, in this scenario here, this home has property taxes of $11,000 and change. You can only deduct $10,000 of that. And that's a big problem for people here in Jersey with the high taxes, or any state that has high taxes. There's a lot of towns here in northern New Jersey that people are spending upwards of $15,000 to $20,000, even higher in their property taxes, but they can only deduct $10,000. Yeah, that's a story for another day. Now, if you take all of these deductions, you add them up, if they're more than what the standard deduction is, which I believe it's around $22,500 or something like that for a married couple filing jointly, if those deductions for your house, meaning all those things, the interest, the PMI, the property taxes, if they're all higher, they add up to be higher than the standard deduction, then that's awesome. So that's like less now you have to pay in taxes. You can deduct that off of your income, which is pretty awesome. Now, the other pros besides the tax benefits are obviously it's the appreciation, right? Your home will appreciate in value over time and you are building equity. So the more you pay your mortgage down, the more profit you're going to make when you sell the home down the road. The other big benefit to owning a home is that you can do whatever the heck you want to it. You want to put an addition on, you want to put in a swimming pool, a hot tub, whatever, what have you, you can do it. You own that home. You have control over your own property. Now, the cons to buying a home, obviously, like I just explained, the initial cost. It does get expensive. It's daunting. It is very daunting for people to even consider saving that amount of money. The other cons are the market risk. There is that risk that the housing market could take a downturn. And, it's not happening right now. It hasn't happened yet. Let's hope it doesn't. But there is always that risk. And the other con is maintaining and dealing with unexpected repairs. It gets costly. You need to be prepared for that. Now let's talk about renting. Let's get into this. Let's see if USA Today was right. So what I did is I went into New Jersey MLS. I wanted to see what had rented in the same town where I found this house for sale for $500,000. I didn't want to look at the current market, but I wanted to see what was rented and how much it rented. First of all, the rental market is really tight. There were hardly any rentals out there, but the ones that I found that have rented already, I found one in the same town. It's a 4-bedroom, 1.5 bath home. So I had to find something pretty comparable to the one that's for sale. Now this house that rented is slightly larger. And this house rented for $3,950. Now let's go back and look at those mortgage payments, right? 10% down, your mortgage payment would have been $4,550, right? 20% down, you're looking at just under $4,000, $3,995. So this example, this rental was cheaper than buying a home. So maybe USA Today is right. I don't know. Here's the other thing to consider with rentals. Number one, it has a lower upfront cost. Compared to buying a home, which I just said could be $50,000 to $100,000. Getting a rental, it's going to be a heck of a lot cheaper. So let me break this down for you. Now, this is an example for this particular rental here in New Jersey. So in New Jersey, at the time you sign a lease, you need to pay your security deposit, which is 1.5 months rent. So that total from this rental of $3,950, that security deposit is going to cost you $5,925. You also need to pay your first month rent, which is $3,950. And in New Jersey, tenants are responsible to pay the broker fee, which is equivalent to 1 month's rent, $3,950. So when you add all of that up, your total cost, your upfront cost to rent this home is $13,825. I know it sounds steep for a rental, but look at how much cheaper it is than to saving up the down payment and closing costs and buying a home. The other benefit here is that you don't have to pay property taxes. You don't. You're not paying it, the landlord's paying it. Well, technically, you are paying it because your rent is going to pay his mortgage and his property taxes. And so maybe technically you are, but you're not responsible for the property taxes. The landlord is. The other big thing is there's no maintenance cost. No. If something breaks, if the roof leaks, a window breaks, landlord's responsible for that, not you. And in some cases, when it comes to landscaping and snow plowing, landlords will take care of that. There are some I've seen lately that are pushing that back on the tenants. They want the tenants to absorb that cost and take care of that. But for the most part, you will see that the landlords will take care of the landscaping and the snow plowing, which I'm sorry, up here in New Jersey, that's super expensive. Just saying. Now, the other pros, obviously, to renting is the flexibility. So if you're planning on living in a certain area for just a year or two, renting is obviously the way to go. The other benefit is the predictable costs. Like your rent's the same every month. It's not changing unless the landlord decides to raise the rent. But that's your primary housing expense. You really don't have anything else to consider as far as your maintenance and taxes and all the things. Now, the cons to renting is obviously there's no equity building, and people will say, oh, you're renting, you're just throwing your money out the window. Yeah, it does feel that way. And it kind of is. You are throwing your money out the window. The other big con is there are no tax benefits. Unlike owning a home, you can't deduct anything off your taxes because you're paying rent. The other con is the lack of control. The landlord is in control of that property. They're going to have rules, regulations. They're going to tell you what you can hang on the walls, if you can hang anything on the walls, if you can paint anything. They're going to restrict you on what you can do to their property. And the other con is less stability. In some cases, I've seen it where the landlords all of a sudden want to sell their properties, and then you have to go find another place to live, and you have like 60 days to do it. So there is that risk there where the landlord may just decide, you know what, I'm done, I'm selling it. And now you got to go find a new place to live. So looking at these numbers between mortgage payment and rent, yeah, it does look like renting wins here. Oh my God.
You don't have to raise your voice.
Well, look, I had to do the numbers. I had to prove it out. But at the end of the day, if you're looking for a long-term place to stay, like you want to be somewhere, you want to establish your roots and be somewhere and raise a family, obviously buying a home is the way to go. Even if you were to buy a house now with these interest rates at 8%, there is that chance, and it probably will happen down the road. Interest rates are going to come back down, and you will have the opportunity to refinance and lower that monthly payment. But if you're in a situation where you just want to stay in a place for a couple of years, well, I would not be buying, because buying will get real expensive for you when you go to sell. You're going to have to pay money on realtor fees, on the commission, plus you're going to have to pay a real estate transfer tax, your legal fees. And if you've only been in the house for a few years, you probably didn't build that much equity. So you're really not going to be making that much of a profit. You could probably just break even, or God forbid, you may lose some money if you've only been in the house for a couple of years and you feel like you need to move again. So what say you? Do you want to rent now, or are you still on the mission? You still want to buy a house? Comment below. I want to hear from you. Hey, if you also want to know how much of a house you can get if you're making $60,000 a year, check it out right here. I break it down for you.